Okay, let's first look at global cues. And I think while global cues may be numb, but they are not something which in a sense will have an impact on the market per se. They are not very market moving in nature. So for me, global cues, I'll keep them separate. They are crucial, they are important, but they are not critical, at least in the current phase of the market. There's nothing on the global horizon which will generate upside momentum or have an impact on momentum on the downside. So for me, global cues can be kept aside if you're trying to make a view on the market and if you want to position yourself ahead of the elections. Now let's look at the election positioning. You may have seen a very ordinary week. Monday, Tuesday were not very strong weeks of trade. But frankly, for me, if I look at the market setup and the profile of stocks which have gone up, I think that's for me an indication that the nervousness in the market ahead of the election verdict is just not there. If one looks at the so-called moody stocks, as CLS is calling them, they've seen a rally. If one looks at the outperformers in the month of May, which would include some defense names, railway names, port companies, shipping companies, infra companies, all of them have done well for themselves. So this market in a sense is positioned for a BJP victory. The profile of the stocks which are positioned are telling you that the market has already started pricing in or has started voting for the continuity. While the market action may not be a very broad-based market action, we've seen the obvious gainers, like I said, defense, railways, shipyard companies, all of them have done rather well for themselves. So the market positioning is very different from what it was, let's say 3 weeks ago, when there was nervousness, anxiety, and there was a lot of curiosity. Right now, the markets are voting for continuity. We've seen a narrow rally in some of the so-called obvious beneficiaries of if the BJP government continues. And we've seen that the excitement in the F&O market also seems to be pointing that there is more long positions in the retail and DI side than short positions.
Okay, so that's the setup of the market right now. Interesting to watch where it goes from here on, because today, of course, is the Bank Nifty weekly options expiry. So that's something which will play out on the minds. But what's also been doing quite well is are those Modi stocks that we are talking about. And of course, we have been passing through the data in terms of the BSE 500 outperformers, and the names are very clear. It's the likes of Hindustan Zinc, Bharat Dynamics, Cochin Shipyard. So largely these industrials and defense names that have managed to outperform the market, even Jupiter Wagons, which is a play on railway infrastructure, Finelix Cables, which of course had a good earnings, but again it's a play on the real estate cycle as well as the infrastructure development that we are seeing in the country, and all of these stocks have managed to rally hard. Nikunj, what's your own assumption? Do you think around elections perhaps these stocks will top out and there could be a profit booking, or do you think this is a secular theme, the Modi stocks, given the fact that the incumbent government is likely to continue, the Modi stocks too will continue rallying?
So Nisha, I think you'll have to add one more ingredient in the melting pot. Then only we can analyze the point which you flagged out, which is the time horizon. I think that is the one which will really differentiate where and what you should do with these stocks. If you bought the popular defense PSU dominated stocks with the assumption that there is going to be continuity of the government and there is going to be a massive rally on 4th of June, well, large part of that is already started getting priced in. CLS has done some brilliant work on, they've looked at the F&O stocks in the morning, F&O stocks, and they've analyzed that the so-called Modi stocks have very handsomely outperformed the market, which means markets are telling you that the obvious beneficiaries, defense, railways, that entire universe, stocks have already gone higher, which means there could be a case of buy the rumor and sell the news in that universe. And a reality check certainly will kick in. So how some of these stocks have moved in the month of May versus how they will move in the month of June, I think would be very different. If your time horizon is into years and quarters, then nothing changes. Order books are strong, the cycle is in a good turn, the capex is looking strong, the government commitment is strong. So the minute you extend your time horizon, while some of these stocks become a strong hold and they are not a sell. But if you bought these stocks with the assumption that you just want to play the election news, then I think large part of that entire price news, news I think is priced in. I expect somewhere in the month of June, maybe closer to the budget, ahead of budget, the market would do a reality check. And markets would start looking at pockets where there is growth and a combination of decent or attractive valuations, or at least decent valuations. And that's where I think the turn for financials would come. So for me now, a sensible strategy would be take some chips off the table today, tomorrow, in the run up to the election, on the election day, immediately after the election. Don't sit on cash, move that money into private financials. That's where I think the natural course of valuations, flows, and the course correction from FIs would actually happen. So Anisha, the other trade which I think is there, and I've been talking about it or we've been flagging it off, is that FIs are still short. They've not covered. They've just started buying, but not in a very meaningful manner. And I think that trade is yet to reverse. So while the obvious trade, which is the Modi trade or the PSU universe, that has played out, that's one trade. The second trade is reversal of FI shorts. I think that has to play out. So I think there is merit in looking at the second trade now rather than looking at the obvious first trade. The first trade is over.
Very clear conviction there. The first trade with respect to the Modi stocks might be over, and if you have a very short time horizon, it might not be a bad strategy to book profits. But the other trade, which is the FII positioning, is still yet to play out, and to play that, the best thing perhaps is private financials. But moving on and talking about that FII positioning a bit more, because the FII long holding in FNO is at a 7-year high. So of course, remember it was at multi-year high in terms of the short position earlier. In a matter of a couple of weeks itself, it has reversed, and now their long position continues to be around 54%. So in a matter of 10 days, it's completely reversed. The rollovers, however, are on the weaker side. So if you look at the Nifty rollover right now, of course, the expiry is tomorrow for Nifty, but the Nifty rollover is 49.2% versus average of over 70%. But for Nifty Bank, which expires today, the rollovers stand at 51.5% versus 78.6%. So that is how the entire FNO positioning and the FIS snapshot is looking like right now.
So Nisha, if you just look at brokerages, and this is the point which I think would be repetitive, but you need to look at that point again. If one really looks at what brokerages in a sense are now communicating, and this is, we are quoting the brokerages here, JM Financials, Phillips Capital, IFL, Bernstein. Let's look at it. I guess they are pretty much telling you that, or they are communicating to their clients that it's going to be BJP all the way. JM Financials, 300 seats, base case. Bull case, 310. So JM Financial is making a case for 300 seats for BJP. Philip Capital, 300 seats for BJP. NDA 330 to 340, that's the bear case. The bull case is 360. Let's look at IFL. They are, I guess, in terms of their base case, I think is the most bullish one. That's IFL for you. BJP up to 320 seats and Bernstein 330 to about 350 seats. Bottom line here is that, and we're purely talking about price action in the market. 15th of May, what the mood point in the market was versus what the market positioning is in terms of brokerage assessments, price action in individual stocks, the recent run up in some of the Modi stocks or the entire infra universe. Lot of good news is getting priced in. I don't think markets are ready for a nasty surprise, and I really hope there is no nasty surprise. But even if the surprise is positive, you could ask yourself is that how much of the good news is in the price. And never forget, never forget this one line, which is that in markets, what is in the price really matters. So markets buy the rumor, sell the news. So the limited point I'm trying to make here is that the risk reward ratio in the so-called Modi stocks, if you bought them for the election pop or the election news for this event, I think is not there. However, the risk reward ratio in buying into financials and some of the stocks where the secular trend is strong, I think is far greater. So time to switch or time to book some profits.